Let's get more on the markets now with Joshua Mahony in London. He's a senior market analyst at IG Group. Good to have you back with us, Joshua. Let's start with Brexit, because there are reports now that Theresa May ask the EU for a 3-month delay on the official withdrawal date of March 29. Are markets pricing that in?
Yeah, so the way that I see it is that ultimately we're going into a position where seemingly the only two possibilities would be a no-deal Brexit, which everyone within Parliament is very much against, or Theresa May's deal, which at the moment she hasn't got any other concessions on the backstop. So I think really the one thing, the sort of not necessarily get out of jail clause, but certainly one way to avert this decision is to elongate the timeline and add another period of time on to it. So for me, I think it does seem likely. The amount of time is going to be questionable, and you allude to a potential 3 month. 3 months is probably an appealing amount of time, because it also kind of basically, if you're going to have another referendum, you need an extended period of time. 3 months probably isn't enough time for that, so it's probably going to get enough votes from the Brexiteers to be able to gain enough support for that extension.
Let's go to the other side of the world now. There was a bit of a sell-off in the Aussie dollar on those reports that China had banned Australian coal. Since then, officials have said that's not the case. Are investors buying those reassurances?
Yeah, certainly. It's been a very volatile week for the Aussie dollar. You know, this whole issue in terms of coal, the problem that could be that this could be alluding to something in the future that could be a wider issue between China and Australia. By and large, this, in terms of the grand scheme of things, it doesn't really account for a huge amount of coal from or exports from Australia that's actually been impacted. And certainly with the fact that you're saying that they're now starting to refute the claims that they're actually being blocked at the ports, I think that this is probably going to be something that's temporary. If they did have some sort of cap in the future, which has been alluded to, that could take some of the heat off the Australian dollar. But I think really at the moment people are looking towards trade talks between the likes of China and the US, the possibility of China to really start ramping up that growth again. And that's why you're seeing a little bit of a bounce in terms of the Aussie dollar, because if we did see a deal between the US and China, that would be particularly good for the Australian dollar.
OK, and just very quickly on the US-China trade front, we know Donald Trump is due to meet the Vice Premier later on Friday. Are traders hopeful about progress there?
Yeah, I think that there's a big difference between what we were seeing probably not so long ago, maybe a month or so ago, and where we are now. Certainly, previously they would meet for maybe a day, and about half the way into that day, we'd see them essentially call off talks. Now it seems to be consistent, and you're seeing a ramping up in those talks, Donald Trump now getting involved. So markets certainly are starting to price in the increased possibilities that we will find some sort of solution in the near future. I don't necessarily think that it's going to happen this week in particular, but certainly the signs are that we're moving somewhere towards a positive conclusion, and that's why the FTSE 100 at the moment is seeing miners really outperforming. Despite that whole thing with Australia and coal, the miners really enjoying the idea of this deal potentially getting signed in the future.
OK, Joshua Mahony in London, thank you as always.